Hello and Happy New Year. My name is Jason Mercer, the Toronto Real Estate Board's Director of Market Analysis. Now, with the fourth quarter of 2014 complete, I would like to take a few minutes to review what took place in the commercial marketplace in the last part of the year from the perspective of lease and sale transactions reported through the Toronto MLS system. Against this backdrop, I would also like to touch upon the pertinent underlying market indicators. So, TREB commercial network members reported 5,120,001 square feet of leased industrial, commercial retail, and office space during the fourth quarter of 2014. This result was down by 5% compared to the fourth quarter of 2013. The amount of space leased was down for the industrial and commercial retail segments, but up for the office segment. Now, turning to average lease rates, we saw rates for properties leased on a per square foot net basis where pricing was disclosed were little changed compared to the fourth quarter of 2013 for industrial and office properties. But the average lease rate for commercial retail properties was up on a year-over-year basis. So generally speaking, average lease rate increases or decreases result from both a change in market conditions and a change in the mix and type of properties leased from one year to the next. Now, moving from the leasing market to the sale market, total commercial sales in the fourth quarter amounted to 243, which was down in comparison to the same period last year when 336 properties were reported sold. Now, while the number of transactions were down, average selling prices on a per square foot basis, again where pricing was disclosed, were up for industrial and office properties and down only slightly for commercial retail properties. Now, when we look at the broader economic picture, we can get a sense as to what affected the commercial real estate market in 2014 and how the market may unfold in 2015 as well. So the third quarter 2014 GDP result for Canada was quite strong, with annualized growth coming in at 2.8%. Now, it's interesting to note that exports played a positive role in this regard, which is obviously an important factor for many of the firms operating in southern Ontario who are focused on the production of goods and or services destined for the United States. Now, obviously, the dipping value of the Canadian dollar vis-a-vis the US was a positive factor here. However, in the fourth quarter, we certainly did see some economic and financial turmoil in equities markets, and a lot of this was obviously associated with the price of oil. So there also was and will continue to be some challenges that could impact business confidence and by extension the demand for commercial real estate moving forward. We will likely discuss these issues more in the coming months. So in conclusion, the GTA remains a recognized global region that will continue to attract people and businesses from around the world, and so this should bode well for the commercial real estate market over the longer term. With that, thank you very much, and I look forward to speaking with you again soon over the coming months.